Well, when you look at the performance of Asia last night, you see recurring the move down in China, India, Malaysia, higher beta Asian markets, but Indonesia actually bounced nicely. Korea, which is the market everybody's waiting to crack, actually was up 22 bips. And the currencies are another place you really have to take notice, and we always point to this as being a place that you're going to get your volatility signals. We've seen significant weakness year to date, but over the last couple of days you've had a bit of a settling out process as the dollar's been struggling also against some of its global peers. Last night with the UK growth estimates moved down again, and they may be the first of the major economies that starts to show round two, maybe this is round three, of questioning the overall growth model. You've got the potential for the emerging growth story to undergo at least questions, but across the board you're seeing a pullback. The market is bucking the trend is Russia, which is actually stronger this morning after the big pullback yesterday off the horrifying news on the bombing in Domodedovo Airport. The story for commodities really remains, I think, the backdrop that most people are watching when they're playing both Russia, when they're playing a lot of the EM space. Oil has had a nice pullback. There's a lot of tension and anxiety over the inventory numbers we're going to get this week. I'd say keep a close eye on that, because that really is the fundamental benchmark you need to follow. Spec longs remain ridiculously high in commodities, and it's tough to understand the reality of the demand side of this until you get real demand numbers, and that's what the oil numbers will tell you. Copper down almost 2% today. Wheat, corn, other softs down 1.5% to 2% today. So the only things that seem to be bucking the trends are nickel and aluminum, which have remained strong all year, and I think probably continue to remain strong. So I think that's your backdrop. The U.S. numbers today, both U.S. Steel was decent, Johnson & Johnson was decent, showing great growth in emerging, and the multinational trade in developed into emerging has been the strongest trade you've had in emerging this year. So keep an eye on that. It's the developed market bid out pushing the flows from the emergings. So the financial flows that were a big part of talking about last year have absolutely moved in favor of developed markets this year. So the Procters & Gambles, the Unilevers, the Johnsons & Johnsons, even the Exxons, the companies that have significant EM exposure but remain developed market, big, bold bracket names and index-weighted names are the things that are doing best here. So keep an eye on those. Thanks.